Hello traders, this is Rich from Tradesight. This is our market preview for the coming session. This is going to be for Tuesday, July 30th, 2013. We had a fairly sloppy day across the board here. We lost a little bit of ground after just barely hanging on to it on Friday. So what we'll do is we're going to wind up setting up just below a couple key levels, and we'll take a look at those in just a little bit. The other thing I want to point your attention to was the market. Well, it was down a little bit. If you look at the major averages, internally it was fairly weak. We were minus almost 1,200 issues on New York, minus about 1,000 on NASDAQ. So we'll dig down into those in just a little bit. But let's move on and take a look at the E-mini contracts. You see what the futures price action looks like on the chart. All right, so here's a look at the ES futures. You can see that we're still kind of gaming this 8/8 level. Today we used it as resistance. So the 1687.50 area is very, very important. The overall design of the chart now has leveled off, and we've really just started going sideways in this lateral consolidation area right under this key level. We're fairly deep into the count here on the Seeker countdown. We're up to bar 8, but haven't been able to add on to that because we haven't had enough push to the upside to really add on to that. And the MACD is also starting to roll over here with potentially a lower high and a negative cross. So we're really getting close to seeing some momentum develop to the downside, and we will likely see that if we get a close and a follow through below the 10 EMA. If that happens, the next support is going to be 1656, and then 5/8 here at 1640, where the 50 DMA comes into play. It's also the heart of this consolidation here, so that's going to be a very important level. To the upside, if we do pivot higher, the previous high 1693, 1694 is going to be in play, and then the 1/8 level, the plus 1/8 level at 1703 will be the next level. Moving on to the NQs. NQs are still basically in this range. We broke down a little bit, found support at the 10 EMA. Haven't been able to challenge these other highs. So right now I'm just calling this kind of just a sloppy lateral range. And until we really pivot out of that, technically nothing new has happened. We did print 9 days up in the Seeker count, so we're 1 day ahead here in the NQs of the ES. So we're potentially only 4 days away from a signal. Could happen this week if we do continue higher, so that's definitely something that should be in the forefront. If we do push higher, we're going to find significant resistance at 3125, which is the 8/8 level to the downside. The 6/8 level is going to be big because that also is coincident with a 10 EMA. And then this prior low here, 3023, and that opens the door to fill this gap from a few days ago. And if that fills, then that's going to be off the to-do list, and then the 4/8 and the 50 will come into play. The other thing I want to take a look at now is the TLT, which represents the government long bonds. It's the ETF that represents them. We've got a 13 exhaustion in place. We had this gap to the downside where we kind of opened and touched the risk level, which would invalidate the signal, but it didn't break. So right now we have this lateral movement. This signal's still in play, but this is starting to get very long in the tooth for reversal. You know, after a certain amount of days, this will time out. But for now, we're still in play here. And if we do pivot back to the upside here, we've really got to clear this 3/8 level to develop some momentum to the upside. But certainly that can happen, and there's plenty of room to the upside if they want to do that. But for now, we're essentially just kind of slugging sideways. All right, so as far as the market internals go, we had the 10-day trend today closed at about 0.9. That got our 10-day average here bumped up just a little bit, but we're still short of the 0.85 threshold for a reliable reversal. Hasn't happened yet. When we do record that, we're definitely going to be on guard for a pretty serious snapback and a reaction to the downside of the market. Keep in mind that if this reading is also coincident with the 13 printing in either the NASDAQ or the S&P side, and better yet, both sides combined, that will be even a stronger signal that a reversal is going to be at hand. And if that all lines up together, it should be a very strong one. Here's a look at the total put-call ratio. We haven't looked at this in a while. We've been in this lateral range, which tends to keep this in the neutral area, and it is there as you would expect. So definitely going to be taking a look at this if we do make a move out of this range to see if we get some kind of a divergent reading. All right, now looking at some other market internals. So this one's pretty important. The SOX continues to lose relative strength against the NDX, and that's definitely negative. The SOX tends to lead the NDX and can provide a lot of strength. We've fallen back down below this key breakout level. Here's the weekly chart, which will clean it up and make it a little bit more visible. Here's that breakdown line, which becomes the breakout line. We spent a little bit of time above it, but couldn't hold it. We're starting to get a little bit more serious to the downside. If we do take out this prior low, this will be an expanding pattern, which is a reversal pattern, and then we really have to start thinking lower here, and that'll be a real sign of weakness, and definitely unwelcome to the bulls, and definitely something that the bears want to throw into that stew that they're hopefully cooking up to get some downward movement. Here's the BKX. That's the blue line pushed out to a new high and started to get some distance on a relative strength basis versus the overall S&P. We're starting to lose that right now. We're pulling back in here. Look for support though in the BKX when we pull back into this area of the breakout. That could be as early as tomorrow if there was some weakness. So keep an eye out for that. All right, and here's a look at the 10-day, the cumulative advanced decline line. Let's look at the lower graph first. This represents the NASDAQ side of the market. We had this trend line that was key support for the market. We had this little hiccup in this break, which was kind of a warning shot. We did reclaim that line, lost it a second time, and just barely reclaimed it, and are now rolling over again. Since NASDAQ tends to lead the broad market, we want to make sure that that this can reassert itself and curl back up here. Looking at the New York side remains broken below this uptrend line, which means that there's fewer and fewer stocks doing the heavy lifting here, and that the overall market breadth is waning. We're actually starting to decline here, and the real problem is that this high is still in place and hasn't been taken out. So this is definitely cause for concern here, because we've got this double top in place and we're potentially rolling back to the downside. This has really broad-based, long-lasting implications when this starts to affect the market, which it probably will sooner rather than later. This is kind of a slower-moving indicator, but it does lead the market, but it doesn't move violently usually. So this has already indicated that we're starting to roll over here and haven't been able to take out that double top. The market's trying to push up to new highs, but this is not cooperating. So we need to see this on the broad market side make new highs, and if it doesn't, that's going to make any new high in the market suspect, because that'll mean that it's got very, very narrow breadth and not a lot of support from from the broad base of stocks. All right, so let's take a look at the individual sectors. Let's click on percent change here and rank them from best to worst. The utilities, which is the defensive group, was top gun. Cyclicals were okay. Pharmaceuticals are generally defensive as well. So you see in the consumer staples were up there as well. So mostly defensive names at the top of the list here. At the bottom of the list, the economically sensitive airlines were weak. The BTK was weak. Transports, economically sensitive, were weak. Oil services, again, very economically sensitive, were weak. Housing sector was weak. So you get the theme here. Defensive issues, definitely the stronger ones on the day, and the economically sensitive ones were fairly weak. Its defense index is 13 days up in the Comer and 11 days up now in the standard Seeker countdown. So keep an eye on that one as we go forward this week. Housing sector is looking for a buy here. We've got a buy in place on the Seeker, and we're only 1 day away from getting that 13 rating on the Comer, so definitely keep an eye on that. That could be a really nice turn to catch. All right, here's our multi-sector daily chart. This kind of just graphically portrays those important sectors that we just looked at. XAU was kind of middling today, didn't do too much. Definitely stronger than a lot of the different indexes, but most of the growth indexes were weaker. You can see how the SOX, the semiconductors, are really starting to dive here. Everything was down a little bit today. All right, so let's start with the bottom of the pile. Here's the SOX. SOX were weak, relatively weak today. We expanded the range to the downside from this little rollover. We closed below the 50 DMA. We're coming into minor support here at the 6A level at 468 3/4. We're 8 bars down now on this setup phase. So if we get to, once we complete 9 bars down, we're going to find some support from that and probably start to level off. So tomorrow's probably not going to be a great day to start initiating shorts in the semiconductors. I would definitely treat those as rentals only on the short side. Doesn't mean you can't scalp them short, but I wouldn't be taking those home looking at 9 days down there. Let's flip over to the BKX banking index. Just barely nudged below the 10 EMA. You can see that we've been above the 10 EMA since late June. So this is a pretty notable change here. Also note that we could be crossing over here in the MACD to the downside. No bar count here in the way from the setup phase. We're only 2 days down there. Now let's flip over to the oil services. The OSX dropped down fairly aggressively today. We do have our MACD cross to the downside. This went down to the 50 DMA where we're going to find first support here. Next support is going to be 257.81, and we're still relatively early in the bar count, so we can definitely keep working on these on the short side, and they're definitely things that should be popping up on the scans as we seem to be picking up some momentum to the downside. And finally, here's a look at, let me just flip this chart. Alright, so here's a look at the gold futures. We are 9 days down, and pivoting off of that, we're starting to return back to the upside here. We're congested here right around the 50 DMA. If we pivot a little bit higher, we definitely could break out this consolidation range. If we take out this consolidation range, we're going to be looking for this static trend line to come into play. So we got plenty of room here up to about 1384, 1385 or so before we get into the next area of resistance. So we've got support here so far from the rising 10 EMA. Got support from this rising 10 EMA, and then right now we're kind of just wedging in here. So when we do break out of this range one way or another, we should have a pretty nice move. So make sure you don't move that. The GLD has been a nice player. Buying breaks has been working, so I'll continue to do so until we lose this range. If we lose this range, then jump right on the short side, and then we're going to target this 1250 area. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.